This is Robert Harper with Farm Bureau's Grain Division, bringing you the Merchandiser Minute for Friday, April the 26th, 2019, where we've had another really difficult week on the futures board. We came into this week with corn planting at 6% in the United States. Our normal 5-year average is 12%, so we were definitely behind this first week that the trade really appreciates and pays attention to that planting progress report. The real story this week, though, in futures is just the complete control of the futures part of your cash price by the managed money speculator. We came into the week with a record short corn position, over 300,000 futures contracts, and a very large and growing short or sold position with soybeans and wheat futures. We had a few days this week where we closed near the lows of the day, and that's a clear sign that downside momentum is present. The speculator is short. They're looking for any headline or any news that will drive the price lower. Obviously, the lower it goes when they buy those futures back, they get more profit. So we're definitely dealing with their control of the market right now. When we look at the dollar futures this week, we've seen a big rally. The dollar is still seen as a real safe haven investment for many speculators around the world. And that's hurting our commodity prices as well. And one thing to remember, that worldwide currency trade is definitely having an impact. I don't know exactly what type of impact, but it's big, definitely having an impact on the futures part of our price. We had an announcement this week from the United States that any countries originating oil from Iran after May the 1st would face U.S. sanctions and tariffs. That sent a lot of ripple effects through the commodity markets as speculators traded the board lower, thinking that this would be very stressful to any trade deal that could be worked out between us and China. Pay attention to that in the coming weeks. We did get a wonderful number this week. First quarter U.S. GDP came in at 3.2% growth. That was way more than what most economists thought was possible, and really seen as a bright light as many parts of our economy, other than agriculture, are running strong. Exports came in as expected this week in the weekly Thursday report. Remember, if you'd like to see that information any week, please call me at the office and I can show you what countries are at the top of the list and where your production is going. We did have a highlight this week with soybean meal. Soybean meal, United States sold a lot. And it looks like as Argentina is maybe about 25% harvested their bean crop, there might be some protein issues with the early beans that are being harvested in Argentina, and it's drawing some more demand on the U.S. We've got barges stuck on the Mississippi River due to high water and flooding that are full of fertilizer. It's a lot of farmers that are greatly anticipating those barges' arrival to the upper Corn Belt. Keep your eye on that as more weather issues develop. And even as we speak today, President Trump is meeting with Japan's president in Washington as they try to work out a trade deal. Remember, since the United States stepped away from the Trans-Pacific Partnership Agreement, the other 11 nations in that agreement have quite an advantage to us on trade, and President Trump is trying to work out some of those details. As we go into next week, remember, we'll be completely rolled from the May futures to the July futures contracts. Call me about local basis for corn, wheat, or beans. New month always means new money flow. We'll be looking for that. We'll be watching the planting progress report at 4 o'clock on Monday. There's a lot of planters rolling this week in many parts of the Corn Belt as well as here in Virginia. Round 11, I believe it's round 11 of the trade talks will begin in Beijing, and look for any news about the USMCA getting ratified. This is Robert at Farm Bureau's Grain Division.